Hey everyone, welcome to our ultimate guide to real estate investing. Today, we're going to be talking about the different types of properties you can buy in real estate, and we'll be going into detail about the pros and cons of each asset. Real estate investing can be a fantastic way to build long-term wealth, but it's important to understand the different types of properties available to you before making an investment. So, whether you're a seasoned investor or just getting started, this video is for you. Single-family homes. First up, we have the classic single-family home. This is probably the most popular type of property when it comes to real estate investing, and for good reason. Single-family homes can provide a stable source of rental income and long-term capital appreciation. Plus, you get the benefit of owning a piece of property that you can call your own. However, there are some cons to consider as well. For example, single-family homes may require more maintenance and management than other types of properties. Additionally, if you have a tenant move out, you could be left without any income until you can find a new tenant. Multifamily properties. Next up, we have multifamily properties like duplexes, triplexes, and apartment complexes. These properties can provide a higher ROI than single-family homes, but they may also require more management and maintenance. That being said, multifamily properties have the benefit of having multiple units, which means that if one tenant moves out, you still have income coming in from the other units. Plus, if you have an on-site property manager, they can take care of a lot of the day-to-day management and maintenance tasks. One thing to keep in mind with multifamily properties is that they're subject to different laws and regulations than single-family homes. For example, there may be stricter fire and safety codes, and you may need to provide more parking spaces for tenants. Commercial properties. Moving on to commercial properties like office buildings, retail spaces, and warehouses. These properties can offer even higher returns, but they require a significant investment. With commercial properties, you're dealing with businesses instead of individuals, which means that the leases are typically longer and the tenants are more reliable. Additionally, commercial properties often have higher rent prices, which can mean a higher ROI for you as an investor. However, commercial properties can also come with more risk, as businesses may move or go out of business, leaving you with an empty property. Additionally, commercial properties may require more specialized knowledge and expertise to manage, as you'll need to have a good understanding of the local business climate and tenant needs. Vacation rentals. Next up, we have vacation rentals, like Airbnb properties. These have become increasingly popular in recent years, and for good reason. Vacation rentals can offer a high ROI, especially if you're in a popular tourist destination. Plus, you have the flexibility to use the property for your own vacations when it's not being rented out. However, vacation rentals can also require more management and maintenance, as you'll have to deal with turnover and the occasional unruly guest. Additionally, some areas may have regulations or restrictions on vacation rentals, so it's important to do your research before making an investment. Real estate investment trusts, REITs. Last but not least, let's talk about real estate investment trusts, REITs. These are a type of investment fund that owns and operates real estate properties. Investing in a REIT can offer a high ROI and diversification, but it may not provide the same control and flexibility as owning physical properties. Additionally, REITs are publicly traded, which means that their value can be affected by the stock market. On the other hand, investing in a REIT can be a good way to gain exposure to the real estate market without the same level of risk and commitment that comes with owning physical properties. Now that we've covered the different types of properties, let's take a closer look at the pros and cons of each asset. Single-family homes. Pros. 1. Stable source of rental income. 2. Long-term capital appreciation. 3. Ability to own a physical asset. Cons. 1. Requires more maintenance and management than other types of properties. 2. Risk of being left without income if a tenant moves out. Multifamily properties. Pros. 1. Higher ROI than single-family homes. 2. Multiple units provide a buffer against tenant turnover. 3. On-site property manager can take care of many management tasks. Cons. 1. Subject to stricter laws and regulations than single-family homes. 2. May require more management and maintenance than single-family homes. Commercial properties. Pros. 1. High potential ROI due to higher rent prices. 2. Longer leases with more reliable tenants. 3. Potential for specialization in certain industries or niches. Cons. 1. Higher risk due to businesses moving or going out of business. 2. May require more specialized knowledge and expertise to manage. Vacation rentals. Pros. 1. High ROI, especially in popular tourist destinations. 2. Flexibility to use the property for your own vacations. Cons. 1. Requires more management and maintenance than other types of properties. 2. May be subject to local regulations and restrictions. Rights. Pros. 1. High ROI and diversification. 2. No need to manage physical properties. Cons. 1. Lack of control and flexibility compared to owning physical properties. 2. Value can be affected by the stock market. As you can see, there are pros and cons to each type of property, and the right investment for you will depend on your goals and risk tolerance. Now let's talk about typical ROI for each asset. Single-family homes typically provide a return of around 5 to 10% per year. Multi-family properties can offer returns of 10 to 20% or higher, depending on the number of units and the location. Commercial properties can provide even higher returns, often in the range of 20 to 30% or more. Vacation rentals can offer returns of 10 to 20% or higher, but it's important to factor in management and maintenance costs. Rights can provide returns in the range of 8 to 12% or more, depending on the fund and the market. It's important to keep in mind that these are just typical returns, and your actual ROI will depend on factors like location, property condition, and management expertise. In conclusion, real estate investing can be a great way to build long-term wealth, but it's important to understand the different types of properties available to you and the pros and cons of each asset. Whether you're interested in single-family homes, multi-family properties, commercial properties, vacation rentals, or rights, there's an investment out there that can meet your needs and help you achieve your financial goals. Thank you for watching, and happy investing. Please subscribe for more.